Welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra. Well, we are in the expiry week of the February FNO series as of starting today. Largely a forgettable series so far, as the Nifty is down about 450 odd points so far. And after last 8 days of being nearly stuck in a very tight range, trying to protect 22,800 on the downside, we want to know whether things will change for the better this week. It's difficult one to say because so far in the last few weeks, what we've seen is that the Indian markets have been under pressure, whereas the global markets have been outperforming when you talk about the mother market, the US market. But what has changed is that as of Thursday and Friday, the US markets also did come under pressure, especially for Friday. There was a sharp fall across the Wall Street. And that has added on to the series of negatives that we are enveloped with at this point in time. So the US markets ended lower as fresh data sparked concerns about the economy, the growth and inflation. The declines worsened amid fears of potential policy actions by Donald Trump, who has already proposed numerous tariffs thus far and other policy changes in the first month of office itself. So the Dow Jones fell by 1.7%, S&P 500 dropped by similar amount. We've also seen the Nasdaq tank about 2.2% in trade. Now following this, the Asian markets also started off lower for the day following Wall Street's worst session of the year on Friday. The ASX 200 was trading about 0.08% lower. The Kospi slipped about 0.7% as well. What we're also looking at is that the Nikkei and the Hang Seng, however, are managing to pull themselves up about 0.2 and 0.3% each. But the GIFT Nifty trends, they were sharply down in the early morning trading session. Right now at 22,710. Let's see how things go on from here on. But what also seemed to be like a brief stoppage in the sell-off that was being seen by foreign institutions in India, again resumed sell-off on Friday, and that too with a significant figure. So on Friday, the FIS sold shares worth about 3,449 odd crore rupees. To compensate this, the DIIs did buy 2,884 crore rupees worth of stocks as on February 21st. Now, among the sectors, even though the broader markets are trying to bounce back and show some recovery, it's the Nifty bank that appears to have taken a backseat amidst the big moves that are being seen in the broader markets. Now, that has actually got the Nifty to be an even Stevens at this point in time. A whole host of stocks that will be important for us to track today. We'll focus on Jio Financial Services on Zomato. Remember, these two stocks will be included in the Nifty 50 index from March 25, so that will be important. BPCL Britannia, they will be excluded from the Nifty 50 index, and these will be replaced by Jio Finance as well as by Zomato. So we'll keep an eye out on that. Healthcare Global is going to be in focus. KKR is going to be acquiring a controlling stake in the company for $400 million. That has triggered mandatory open offer as well. Bharti Airtel will be in focus. The company is increasing its shareholding in the arm Airtel Africa PLC by up to 5% via the Airtel Africa Mauritius. Vedanta has declared preferred bidder for Madhya Pradesh's Kohari Diamond Block, which is G4 level of the exploration, with the total area of over 643 hectares. And Bajaj Housing Finance, BSE and CDSL, these three stocks will also be in focus. That are among the other stocks that are included are Nalco, Premier Energies, that will be included in the FTSE index. So apart from the Nifty 50, there's also the changes in the FTSE index that are going to be impacting some stocks. We'll also focus on Ujjivan Small Finance Bank. That's approved the sale of NPAs and written off loans to an asset reconstruction company. That will be in focus as well. We are going to be looking at railway stocks like RVNL. Lowest bidder it's come out to be for the Southwestern Railway project, worth 156 odd crore rupees. Again, something which is positive for the company. Lupin is going to be in focus. US FDA has issued an Establishment Inspection Report, or the EIR, for manufacturing facility in Somerset in New Jersey, which was inspected between January 27 and 31st of January. Adani Green Energy will be in focus as well. The arm has operationalized solar power project of 250 megawatts at Bimsar and Dwada in Jaisalmer in Rajasthan. So some of these stocks will be important to track. We are also looking at the first ticks coming in as far as the pre-open trade is concerned for the Nifty. 22,447, about a 1.5% drop. That's far more worse than what the GIFT Nifty trends were indicating. And we are below 22,500 right at the opening tick, but this should improve for the better. let's actually invite all our guests on the show as well to get a sense of how should we be looking at certain spaces. We have Mr. Vineet Pulinchkar, Head of Research at Ventura Securities. Warm welcome to you, sir, and thank you so much for joining in. And Vaishali Parekh is also joining in. Warm welcome to you, Vaishali. Good to have you with us. She's from PL Research, and she will track the technicals for us. Warm welcome to both of you at the start of another week. Vineet, starting off with you first. Things were actually hunky-dory in the US so far, but it was the Indian markets that were a concern. But what's happened on Thursday and Friday with, emerging further concerns on what the mother market's economy is likely to go through, is that a worry point for Indian markets and added on negative Q for India?
So, let me highlight the risks in decreasing order of importance. The first primary one, which not much uh, attention is being paid to, is whether there is enough gold in the Fort Knox.
Yeah.
If there is not enough gold in the Fort Knox as expected, then you're going to have the dollar take a tumultuous beating. If that were to happen, we are going to see severe uh, equity sell off everywhere because the reserve currency itself comes into question, and the rate at which the government is in a hurry, the Trump government, to put things in order, is because they cannot control the sequence of events of the economic crash. Very, it's getting out of hand for them. We've already seen the markets come off, and I believe that it's the beginning of a sell off where the bubble is burst in the US, and we will see a sharp sell off. Second thing is that as the government cuts back on spend, you're actually containing the GDP while they're making while they're talking about better quality of spend coming through. But I don't think that is going to happen initially, and we are going to see some very sharp cuts take place that is going to affect Indian markets also.
So how much more downside do you see, Vineet, from here? I mean, what are we at risk of looking at probably? What could be the worst that we could see?
So I think 21,000 on the index is what I have been talking about for a very long time now. That is one of the points where we saw the market sell off dry up. That was during the election times. So I think getting there and bouncing from there will mean that a lot of the negative is being priced in, and from there we could see some kind of a decent bounce back come through in post March.
Fair point. But, Vinny, then what would you advise investors to do at this point in time if we are at the risk of further 1,000 points, 1,500 points from here on? What is the ideal strategy that one adopt? I mean, double down on our SIPs on the lower end, as we see in the markets right now. Should we stick with the index? Should we go for stock specific moves or sectoral action? How should one really approach the market at this point?
I think the first strategy is to protect your portfolio. One way is to use Nifty or small cap index or the mid cap index put options to protect your portfolio, number one. But two, if your portfolio is fairly has a large contribution of stocks from the FNO, you can use puts from those series to look buy into it. Second strategy is to get more defensive in your shareholding. FMCG is something which is likely to be least affected, so I believe that that is the other trend to play out. And third thing is that wherever you have your holding Dutch shares, just sell them off because they are going to get even cheaper than what they are today. So that is a strategy. Safety first, build cash, protect your portfolio, sell your Dutch shares, do your tax planning right away, and sit tight. Let this yeah.
Yeah. Vineet, also wanted to get a sense on, specifically the sectors that are getting impacted of Trump's tariff talk. Since we are talking about US markets, the impact that could be. Auto space is bearing the brunt of it. We are also looking at Tesla's entry, also creating some ripple effect. How are you looking at stocks like M&M, which have actually lost about what 10-12% in the last few days odd? And after this move, has started to come in on US Trump tariffs as well as Tesla's entry. Should one look at this as an opportune time to really enter some of these stocks? A lot of brokerage houses are still overweight on the stock. How should one look at the auto space particularly?
I think, I personally believe that the entire market is going to get skewed to Tesla stocks initially, in terms of purchases. And once that uh, thing plays out, then we'll see all the other players come in with their own EV models. They will want to beef up their models, come up with newer, better products. And till that time, I think this stock can sell off quite more. I think the stock has peaked for some time, and its valuations are also expensive. So that is my take on this stock.
Okay, we'll also get Vaishali into the conversation. Vaishali, another week that's starting. Of course, we have a truncated week of action again. Wednesday is a holiday on account of Mahashivratri, and therefore this FNO expiry week also gets into trouble even further because of truncated move. How are you looking at the action for this week on the benchmark level? Nifty Bank has been on the back foot, like I mentioned. Broader markets have been time and again showing us some strength, but what exactly is your position? 22,600 right now.
Very good morning. So I think market has at last broken the crucial supports. We were market all this while has been hovering around 22,800, 22,720, and today we see a gap down opening. So I
Yeah.
guess there is some more weakness to stay on. I would say we are heading towards 22,500 to 22,000 to 21,500. So these are the downside projections. Now, so far, Sakshi, we saw that there was always some sector which was holding the market. But now I think it's time. Maybe Reliance will get into selling. Maybe HDFC Bank will get into selling. IT stocks were already on a weak bias. Like maybe we may see some further selling coming in Infosys. So overall, it is a weak bias now that we are seeing a opening like this. So that's my view.
Okay, any key stocks, Vaishali, you're looking at?
So see, till now it was the metal sector which was showing strength on the buy side, and
Yeah.
individual stocks like in the cash category, Linde India or Canes. These were the ones which were technically very well placed and showing strength as per last week's data. So let's see. We will see how the stocks perform this week as we start, and we will form a view like that.
Absolutely. Okay, we'll also speak about some of the other sectors with Vineet now. Vineet, we did discuss the external factor impact on autos. But what about FMCG space? I mean, on 1st of February, when the announcement came in of, more allocation in the hands of people with that huge tax cut that the government announced, this index went up, what, 3%. But after that, it has been consistently dropping 15, 17 straight sessions of decline. The index is down by, what, about 8 odd percent now. What do you think has taken off the sheen from this sector, which we believe that is going to be a turnaround sector?
See, we had seen very, very severe consumption shrinking happening, and that was because of the very gory inflation that we had. Now, this tax break that came was a sop to everyone, and since COVID, people have been really butchered by one was the COVID slowdown, and second was the inflation that came in. And not all that money is going to go into consumption. Part going into consumption, part going into savings. So I think there is going to be some kind of a trade-off happening out here, and it will be some time before this money actually is there in the hands of people where they feel confident that they can spend. So keeping that in mind, I believe that this is the time and the opportunity also to start accumulating FMCG stocks, because they are going to play out once this meltdown stops.
Okay, got that. Well, Vaishali, do you have any FMCG stocks that can still be looked at now that Britannia is going to get excluded from the Nifty 50 from March 25? There's once, lesser stock on the Nifty to play at. How would you look at the FMCG basket then?
No, I was just saying the FMCG counter. I think there is still some more downside left. So I would definitely start with Hindustan Unilever. I mean, but I would look at 1950 levels to get into the trade. Likewise, even Nestle and Britannia, what we are talking about, I think a little bit of a downside, but well, most of the stocks have been really nicely corrected. But yes, when I'll go in sync with the market when we are looking at 22,000 or 2150. That would be the ideal level to look for buying opportunities.
Fair point. Vineet, let's also discuss some of the other pockets then. I wanted to discuss the export-oriented sectors again, pharma and IT. How are you looking at those spaces as well? Both of them have actually seen lackluster moves over the last few days, especially pharma has actually borne a bigger brunt in the last few days of the sell-off. How are you looking at both of these spaces? Do you think they are still extremely vulnerable to look at?
See, I believe that pharma is a better prospect than IT. I think
Okay.
IT will get annihilated in the coming days, because the way at which AI is progressing, there are misnomers that, AI income will come in and all that will happen. My view is that there will be a lot of redundancy in terms of programmers and system integrators that are required. Very few people will be required, and we are actually going to see shrinkage in top line from the coming companies. And to add to that, a declining dollar will create problems of unexpected nature, where we expect the rupee to continuously depreciate. In fact, we might enter a phase where the dollar depreciates, and things get worse from that perspective. And so these export oriented sectors at this point in time are the dollar risk is the maximum for them.
Hmm. Okay, so let me just break this down and ask you for some of the counters there in the pharma space. We were also discussing a few months back, and the theme is ongoing, the focus on CDMO space and how probably things seem to be building up structurally for this space. We have this news that Granules is now foraying into this segment with some acquisitions in the CDMO space as well. On the other side, HCG is seeing like, a KKR bidding for controlling stake as well. How are you navigating through the news flows that are taking place in the pharma pack, and what remain to be still preferred picks for you, Vineet?
So, I will very, very be selectively focused on pure play domestic stocks.
Okay.
We like EVs, life sciences. Supply has got a good, strong exposure to the Indian markets. So, you have to be very selective, picky, and choosy out here. You can't go with the entire basket of stocks.
Okay, so one has to be extremely selective, and two stocks right there that have been suggested by Vineet on that front, EV's Life Sciences and Cipla. Those are the two stocks that you can actually look at this point in time. Vaishali, any preferred picks from you from the pharma side?
Well, so I'm looking at Cipla. Cipla looks quite fine at these levels. So I
Hmm.
would say near 1420, one gets a chance. That would be the level because the stock has really been consolidating. And when I'm looking at the long-term chart also, there is no such damage to the trend. So I guess anywhere between 1420 to 1380, those are the support levels. I guess let's see how, because overall pharma sector is also looking weak. So wait for a dip to get into the stock.
Fair point. Okay. We are just seconds away from the markets to hit open. Vineet, any key stocks that have come onto your radar afresh across the market segments that you'd like to highlight for our viewers?
So I would recommend extreme caution while you're buying IT stocks. I know they've been
Okay.
holding out very, very well in this fall, but it's they're just about at the point where they are going to let go. So I think that is one area where you need to be careful.
Okay, stay cautious on the IT pack right there. Thank you so much, Vineet, for being with us in the morning edition. Markets have started to tick 150 points lower. 22,646 is where we open at as far as the Nifty is concerned. 0.6% of the decline even for the Nifty Bank. You have 48,665 dropping away, 314 odd points right now. So it is a weak start for the markets, below 22,700 for sure. Let's also look at all the sectors. All the sectors point to a weak start today, with a percent loss for metals, a percent loss for PSU banks, Broader markets also lower by 1% each, both mid and small caps. Then you also have the IT pack down by 1%. So at least 5 of the major indices are down by 1% in trade. Then you also have real estate down by 1%. Consumer durables were down by 1%, oil and gas down by 1%. The weakness continues to persist, although private banks are down 0.4%, autos down 0.4%, FMCG 0.4%, and pharma 0.5%. But all the sectors are down in the red. PSU stocks also down by 1.5%. Weakness persists on BPCL, Oil India, Coal India, Steel Authority, all these stocks that are dragging in trade, and ONGC also 2% lower in trade. That's as far as how the PSU stocks go. In the broadest index, you have a lot of stocks that are still hoping to start the positive move and showing us some strength. Swan Defense is up 5%. You have Imami Realty at 5% higher. Then very rare and few stocks that we actually hardly discussed. TCI Finance is up 5%. That's actually pulling up in a weak market in trade. Let's also see if there is anything else that's interesting. On the lower end, you have again a lot of stocks that are pulling down in trade, but none whatsoever that we discuss. BGR Energy Systems 5% lower. Very far and few between stocks there as well. But let's look at the Nifty next names as well. Nifty next 50, only 3 stocks holding up: Indigo, Torrent Pharma, and Bajaj Holdings. Those are the only stocks that are higher in the Nifty next 50 list as well. Let's look at Zomato. And let us also look at Geo Finance. These two counters, I want to see how are they reacting to the opening at this point in time. 2% lower at 225, despite the positive news of getting included in the Nifty index. 1.7% lower as far as Geo Finance is also concerned. Let's also look at how some of the other pockets are now reeling under pressure. Advances are just 381 stocks on the Nifty, whereas declines are 1398. So you see the kind of breadth that is getting pulled down into the negative zone. Now on the Nifty, if you look at the clear names, only one stock is in the green. Rest all of the stocks are down in the red as far as the Nifty is concerned. So that's the kind of pain that you're looking at in terms of the move on the market. I think it's Dr. Reddy's that's hoping to stay in the positive. Just very minor gains on Nestle, Sun Pharma, and Tata Consumer Products, but rest of them have all slipped. Just about 3 to 4 stocks on the Nifty that are hoping up. So you can see Bajaj Finserv and Tata Consumer, but rest of them have all slipped. Hindalco is lower by 1.2%. You have HDFC Bank that's down by 1%. In fact, Vaishali did point out to this one as well. Vaishali, heavyweights, Reliance Industries, HDFC Bank, IT stocks, they're all lower in trade. What's the sense that you're getting as far as the opening is concerned?
As far as HDFC Bank, right?
Yeah.
So I think Bank Nifty is breaking and HDFC Bank is supporting that view. So I would say now I think look for a target of 1640. It could be still a sell strategy with
Yeah.
today's high as stop loss, and one can go for a sell short. Look for a target of 1640.
Look for a target on HDFC Bank on the lower end at this point in time. Still a sell strategy. Even Reliance Industries is lower in trade. Let's actually pull up some of the stocks that we were tracking. The top Nifty losers are SBI, Hindalco, NTPC, Vedanta. They're all lower in trade. Let's look at some of the stocks that we discussed in the pre-open trade to see how are they reacting. Let's look at Healthcare Global. KKR is going to be acquiring a controlling stake in the company for $400 million, triggering a mandatory open offer. So let's look at Healthcare Global to see how that one is looking at open. 3% higher on the positive news, 515. You have Bharti Airtel. Of course, it's going to be increasing its shareholding in its African arm, and that's by about 5 odd percent. Just about 0.1% lower in trade. Vedanta is down. You also have Ujjivan Small Finance Bank. It's approved the sale of NPAs to an asset reconstruction company, and therefore you can actually look at a 1.5% lower. for this one. RVNL, let's see if there is any kind of a positive move. It was the lowest bidder for Southwestern Railway project for 156 crores despite the order flow 2.4% lower. So you can see this market breadth that is pulling down the stocks even with positive news flows. Adani Green Energy, its arm has operationalized the solar power project of 250 megawatt at Bimsar in Jaisalmer in Rajasthan. Despite that, 2.7% lower in trade. So it's a weak start. Bajaj Auto, the company is going to be making a $150 million investment in Netherlands-based arm, Bajaj Auto International. Let's see whether that has any impact. Lower by 1%. Zydus has received a final approval of US FDA for ibuprofen and one more tablet, and therefore let's see whether there is an uptick, just about 0.2%. And Granules also for that acquisition of Chemicals AG for 192 crores and entering into the CDMO segment, absolutely flat with a positive bias at this point in time. So a lackluster start completely for the Indian markets today, viewers. India WIX is at 15.2 levels. It's a 5% uptick. So you can actually see how the volatility is playing havoc right in the morning trade in just the first 5-6 minutes of trade as well. Broader markets further weakening down now, 1.5% lower for small and mid caps. They are pulling down under pressure. Vaishali, how would you look at mid and small caps at this point?
Well, I mean, I don't really want to give it a thought. Let's see some market stability because we don't see anything really in the green. It's all red. So I would just stay away right now.
Stay away right now. There is a sharp fall that you can actually see in the market across the board. Pharma is the only index that is somehow trying to pull up, gather strength to move in this otherwise extremely weak setup in the market. So only defensive play that is holding up. Dr. Reddy's is over 1% higher, Granules is up 1%, Torrent Pharma is up 0.8%, Sun Pharma, Zydus, Cipla, Alchem Laboratories, Glenmark. These are all the stocks that are hoping to stay afloat as far as the otherwise weak market sentiment is concerned. Pharma play for you, Vaishali, anything that you can actually stick to on the buy side?
So the best strategy would be Sakshi to accumulate. So Sun Pharma also is at a good level once it's seen correction. So I think
Yeah.
downside is limited according to me. 1580 in a worst scenario. So Sun Pharma would be the stock that I would look. But besides pharma, I think look at Indigo, look at Bajaj Finserv. They have a clarity. They are showing strength. So I would look at those stocks right now.
Okay, Indigo. In fact, there's an interesting one, Vaishali, that you picked out because Citi has come out with a report on Indigo today. They have a buy rating and a target price of 5,200 on Indigo, and that's also why the stock could be seeking some positives out of this report. So they believe, Citi believes that over the near term, there are two positive key trends that could result in stock markets, stocks outperformance going forward. One is the pickup in the overall air traffic demand, and Indigo's market share is likely to remain strong, is what they say. And two, there is a significant improvement in PLFs in the fourth quarter, which is despite being a seasonally weak quarter, there could be some uptick coming in. So that's something that they are betting big on, and that's why you also see Indigo as the stock that would could look at. Bajaj Finserv is another one that Vaishali did point out that one can look at in this week setup on the positive side in case you're still scouting for positive moves. FNO space, you have Manappuram Finance that's opening higher. Despite apart from Granules and Dr. Reddy's, Oro Pharma, Sun Pharma, it's a pharma play in the FNO space as well. Ipca Laboratories, Torrent Pharma, Glenmark Pharma, all of them are up and about in the F&O space. But apart from that, it's Manappuram Finance. Vaishali, do you think again people may be skewed towards buying or hedging their positions, buying more gold and silver in this otherwise weakness that is sparing, and that's why you can actually see these gold financiers coming back into limelight?
So far they have been doing very well. So I guess that's still a safe haven according to me. So, and to support that, to have a look at Muthoot, Manappuram, they both are holding strong. So one should keep a trailing stop loss and continue holding because the way Manappuram is showing strength, it is open strong. I think in all likelihood this can go towards 220, 230. So, I mean, yes, looks quite likely.
Looks quite likely. Okay, so this space could be seen as a safe haven. Maybe people looking at the equity markets continuing to show downtick. one is looking at gold and silver, and therefore the gold financiers may be looking at a safer place to put their money in as well. We are actually looking at both the broader markets declining and putting the pressure from the higher side as far as the Nifty is concerned. So small caps are now down 1.8%. That's a further decline that's being seen on the small cap space. Even the real estate index is actually down by 1.9% now. Real estate has been actually continuously coming under pressure in the recent days of sell-off that we have seen. Vaishali, despite being an outperforming sector for the last 3-4 years, do you think the steam is somehow reducing as far as the realty pack is concerned? I mean, this entire space was buoyant on the back of huge demand for luxury real estate players. We have consistently talked about how, flats worth over 100 crores were getting sold off in minutes and on a single day as well. And that lifted the entire sentiment for real estate sector for the last 3-4 years. But what now, when the entire bull run is getting, or the bull trend is getting tired, exhausted at this point in time? What about these outperformers of the past? What should one do?
I think, well, it was, well, then, I mean, right now there is full market is under correction. And I think, according to me, all these real estate stocks had given a super run up, and they are normally high beta stocks. So I guess one will see good corrective move coming in these two.
Okay, fair point. So that's as far as the real estate pack is concerned. All of them are down. You can see Sobha, Macrotech. These were the stocks that we used to talk about as well. Godrej Properties. These are all the stocks that are actually coming under pressure in trade. Let's look at the banking space. Again, another space that, Vaishali, at the start of this new year, there was a huge consensus that, financials, banks, these are the ones that should be in investors' portfolios. And this is the time when these pockets should actually start to outperform because of their relevant underperformance in the recent past. And but the problem happened that the FIIs are in no mood to return to India as of now, looking at the recent data that we are seeing. Now, they are heavily invested in banking, financials. These are the heaviest weighted stocks. Do you think till the time the FIIs really come back in strength and in sustainable fashion, these are the pockets that would again stay in the underperforming zone? Vaishali?
So far, Sakshi, you see, banking index has not even retested the previous low.
Yeah.
So we have to wait it out, because if those levels break, then I think there will be a further downslide. As I told you till last week, we will now see once again SBI is coming in the green. So let's see, unless and until it breaks the previous low, it's very hard to tell, because it's always a balance. Earlier we were seeing that good selling coming in Indus and Axis, but then it was HDFC and ICICI holding. Now they are the ones which are selling, and we are seeing some strength coming in SBI right now. So let's see. So if we see a break of the previous low, then yes, I guess we'll see good corrective move coming in almost all banking stocks.
Okay, let's look at some interesting stocks then, if we can find a few. Within the entire financial space, Vaishali, I think the NBFC space, is that something that is looking okay? You talked about Bajaj Finserv, but brokerage related stocks, 361 WAM is pulling up about 2% higher, even though the large pocket is still lower in trade. But do you think this capital markets related space, brokerage related space is something to look at?
I think so, because there is good volume coming in all these stocks, and I think yes. So these are the stocks which are showing some strength in their trend. So yes, these are the stocks one should not miss out on.
Okay, fair point. I hope this has also been a space that investors have actually bet big on, and now we are seeing only very very select pockets and stocks that are actually buzzing on a day-to-day basis. It's not like a ongoing trend that you're looking at here. Again, let's look at some of the other pockets then. We will also focus on the IT pack. Oh, look at the Nifty IT. It's actually down by nearly 2% today. And you look at all the heavyweights. Persistent, again a favorite in the mid-cap space, Emphasis, Coforge, LTI Mindtree. These were the pockets that were LNTTS. So you can actually look at all of these stocks that were in fact erstwhile favorites in the mid-cap IT space. But even the large caps are down. HCL Tech, Wipro, Tech Mahindra, TCS, Infosys, they're all down in trade, and the IT stocks are actually clearly dragging. Something that Vineet just pointed out just before he parted, and he actually said that one really needs to stay very, very cautious on the IT space. Vaishali, what would you suggest here now?
I totally agree because as we started our talk, I was telling you that yes, IT sector shows weakness. So let's see as to where it stabilizes because see technically they are all according to me. I think market also has a crucial support at 22,500. So let's see because these are the levels that I would be looking at for a buying opportunity. But on a macro level, how IT sector takes place, we will have to see, wait and watch. So technically, I would say we most of the sectors are coming close to their support levels. If I'm talking about FMCG, if I'm talking about IT sector, I think a little bit of downside is left. But the worrisome is what we need to see is whether banking index is showing strength, or are we seeing good run up coming in FMCG and metal index also because all need to participate and the other weak sectors need to take a breather. But right now it's not so. We are seeing selling coming in almost all.
Hmm. First minute, 15 minutes of candle is out, viewers. It's a weak start to trade this entire week. Sensex is down by 500 points. All the sectors are down in the red, barring slight gains on the pharma index. There is pressure on the IT pack. There is pressure in the banking space, realty space. But we are also looking at the broader markets that are further weakening, mid and small caps, 1.5% of declines coming in. Vaishali, what do you foresee for the day? First 15 minutes of candle is out. Do you see any recovery happening or taking place, or do you see further weakness from here?
So well, as I told you again, it's Sun Pharma, Lupin. They are showing strength. Even Maruti was showing strength. So very hard to tell as far as the index is concerned. But I think the way the front line is showing weakness, Nifty should head down.
Okay. So there could be some more weakness as we actually see in the markets from here on. But it's the select pharma pockets that are actually pulling up in trade at this point in time. What else is pulling up? In the PSU space, there is some green on BPCL. Vaishali, remember we used to discuss so much of these oil marketing companies, HPCL, BPCL, in their onward run up. Finally, some cool off is taking place in the crude oil prices as the geopolitical tensions are ebbing lower. Do you think time is again ripening to look at these pockets yet again, or still do you think there's a volatile move that one could expect and one could be cautious here?
I think technically it is just right now, it is just oscillating at the support levels, but there is no clarity, there is no sign of reversal. If we have to respect the support levels, then yes, can make a favorable risk reward ratio favorable trade.
Okay. Maruti is something that Vaishali pointed out. It's recovered from the day's low, about 1.2% from the day's low. We'll also look at this stock as well. Aisha Motors also has recovered from the day's low and it's now in the green too. And if you look at the kind of move that we are seeing on some of the select auto pockets, that's positive then. Vaishali, would you be positive on Eicher or a Maruti at this point in time? I mean, we began by discussing on the impact that this entire auto space is seeing because of new entrants like Tesla or BYD or maybe the Trump tariff talk. How would you approach these large, companies within both the four and the two wheelers?
So I would be comfortable with Maruti because so far it has not yet broken the trend. So
Okay.
one is Maruti that I do like, and in the two wheelers also, Sakshi, if you look at Bajaj Auto, etc., they
Huh.
are making double bottom formation. So
Okay.
to my understanding, well, it makes a fair value to consider this stock, because if my view goes wrong, it's downside risk could be 200 points, and if the view goes right, then I guess one can at least to start with one can get a gain of around 500 to 700 points from here. So yes, even TVS, if you see, it has a established trend. So few stocks I do like, and along with that, even auto ancillaries, if you were to look at Sonacom and all, they are showing downside risk to be quite limited. So I guess that means it has an inherent strength. So I would look at these stocks right now.
Okay, if one really digs deep and tries to find out some green, I can also pull up some stocks like ITC that's now improving about 0.4% higher in trade from the FMCG pack. Anything here, Vaishali, that you'd like to suggest? We discussed the FMCG pack, but ITC?
ITC, we have seen good correction, so I think there should be a good level to start accumulating this stock. 390, 380 is the support level that we are looking at. So I would say accumulate from here on.
Accumulate from here on. When you talk about certain subsectors also, there is some green. Paper stocks, actually some of them are actually doing well. Stationery, paper stocks, you see DOMS Industries, that's 2% higher in trade. Astron paper is a percent higher. Within the same sector, one of the rarely discussed stocks, you have DIC India, that's up what, 10%. You have Treehouse Education, that's up by 3.5% as well. Very far and few between names that we are trying to pull up. Sri Rama Newsprint, about a 19% higher. So some paper related stocks are on the move. We're just trying to find out for you if there are any interesting trends that you could probably look at. In this current weak market, it's very, very difficult to spot any stocks that are on the buy side. It's largely towards the weakness that we are looking at. Vaishali, anything that catches your attention?
No, not really. In fact, I would choose safe stocks as actually things like VATech, Wabag. Then right now we are seeing once again metal sector picking up. So I would look at these stocks, JSW Steel, and some of the power stocks. If you look at Torrent Power and all, they are quite at good support levels, and I guess that should do well.
Okay, metals, power, some select stocks from there. JSW was mentioned by Vaishali. In fact, the holding company JSW Holdings is also up by 4.8%. So this entire space seems to be up. Pharma space, again, you have Pfizer that's pulling up strongly, 6.5% higher. You have Gillette India that's up 5% in the broader markets. Then you also have stocks like mm, very, very few and far between stocks that we can mention. Golden Tobacco, that's up. Then you also have very, very far and few between stocks, not many that I can really name. Morarji Textiles, very, very far and few between. Very, very rare, stocks that we discuss here. But yeah, Pfizer is interesting, 7% now up. Vaishali, would you like to chase this move on the higher side?
So I would say yes, this is the first candle which is showing strength. So I would say 4,000 should be the stop loss. And let's see if the stock moves above 4,600. I guess it will be a confirmation of a strength showing in the stock. So that's how I would look at this. So right now it's a range of 4,000 to 4,600.
Fair point. Okay, we'll try and focus on that one too. Okay, some tourism and hospitality related stocks are also buzzing. Royal Orchid Hotels is up by a nearly a percent. Kamath Hotels, Asian Hotels, that's buzzing. Indigo is already marked by Vaishali earlier. Vaishali, hospitality relating stocks, anything that catches your attention?
So I do like lemon tree at these levels. It's
Okay.
128. That is a good stock. Then even Chalet looks pretty decent. So these are the stocks because Indian Hotel has already shown good run up, and as the market is overall showing weakness, I'll wait for Indian Hotel to stabilize. But I guess these stocks look attractive at these.
Okay, fair point. Let's also look at some of the other pockets then, which may be showing us some traction on the higher side. There is Dixon Technologies, by the way, that's up by 1.3% in this week market. That's pulling up in trade. Uh, I'm just trying to figure out any, known stocks that actually look good at this point in time. Pharma, we've already discussed, is the only pocket that's actually higher and showing us some strength. Auto ancillaries, some of them are actually moving up. You have Kalyani Forge, you have forging companies, particularly Sundaram Clayton, Lumax Industries. Some of these stocks actually are higher. Sansera Engineering, that's also pulling up in trade. What else could be looked at this point? You have some retail moves coming in. You have V2 retail that's higher. Future Lifestyle that's up by 4.4% is very, very smaller stock actually. We should not be talking about it. V2 retail is up by 2.5% higher in trade. And Trent is in fact lower. Let's interestingly discuss this one, Vaishali. Trent has come below 5,000 odd levels. How would you really look at Trent? I mean, would you suggest those who had been actually waiting for an entry move on Trent could actually look at these levels to, because the story still is strong. The company is looking at tier 2, tier 3 cities, going on this mass consumption. We were discussing with Vineet also, this entire tax cut that the government has extended will start finally come into play from 1st April onwards. So we have to give that gap at least 2 more months down the line when people start to consume more. It has to go in FMCG, has to go in retail, and with Trent operating Zudio kind of stores, which are mass market stores, and that too in a premium fashion. How would you look at some of these pockets then?
The trend, I think, of course, it's seen a lot of erosion, but I would say still it's not over. It can go towards 4,500 levels. That is the level that I would look at.
Okay, okay, fine. So one can actually look at those levels in case you are still looking at a trend as an opportunity to enter. Look at these key levels that Vaishali's pointed out as a fair entry point. The markets are further, declining in trade. If we look at the Nifty at this point in time, you have 22,575, 220 points lower in trade. So there is no sign of a recovery, at least in the near first 25 minutes, 26 minutes of trade. We are 1% now lower as far as the Nifty is concerned. Vaishali, how much more downside do you see from these levels?
So see, Sakshi, Bank Nifty has just begun, right? So if we don't hold on to 22,500, 22,300 levels, then of course we have the downside of 2150, 500. And Bank Nifty, if it breaks 48,000 levels decisively, I would say it will go towards 47,000 also. So that's what I would be looking
Fair
at.
point. Okay, fair point. Let's then look at some of the other names within the FNO space. Vaishali, anything on the long or the short side that you would like to highlight for our viewers?
Preference would be more on short side. So as we spoke, Reliance, HDFC Bank, those were the ones. I mean, Infosys has already done its bit of corrective move. So not at this juncture, but yeah, I would look at these two stocks because these are
Okay,
the ones
fair.
which will drag market down.
Okay. Again, in the broader market, anything that is interesting is Vesuvius India is actually moving higher by about 4%. We have discussed JSW Holdings, Pfizer. Then you also have stocks like Golden Tobacco, which I mentioned, Ganga Forging, again from the forging space, that's up. British Nandi Communications, that's up 4%. It's the media related space that's probably showing us some strength. Some media, newspaper, print, paper stocks, these are some stocks that are actually pulling up in this weak setup in the market. Imami Realty is up by about 5%. You have Swan Defense. Again, very rare stocks that are actually moving, nothing to really stand out and to be discussed at this point in time as well. Let's also, okay, let's discuss Zomato and let's also discuss Swiggy. Why am I discussing both these stocks? One, because Zomato, as I mentioned, it's going to get included in the Nifty 50 index starting March 25. Remember when the Sensex inclusion happened, the stock further got a lot of momentum, and this time it is going to be the Nifty inclusion. 225 right now, it's still down by about 2.3%. But we are also going to be discussing Swiggy, as Swiggy is also doing a lot of investments and it's also foraying into newer spaces as well. So we are going to be discussing both these. First, let's talk about Zomato. Could you tell us any key levels that you're looking at, Vaishali, here on Zomato?
So Zomato, I think I'm surprised actually it is done so well. I mean, even
Yeah.
right now, the market being so corrective, I don't think, I mean, of course, this from the high of 300 to now 224, but still, I think the uptrend continues. So as long as 200, 190 support levels are intact, I think that would be a good buying opportunity in my opinion. So I would have a positive view right now as long as 190 levels are held on.
Fair point. Okay. Vaishali, what about Swiggy? The company is going to be making an investment of up to 1,000 crores in Scootsie Logistics. How would you really look at its foray, expanding its presence beyond just food delivery as well?
So my data is very limited, I mean, as such, but I say that yes, stock has corrected substantially. It is showing signs of bottoming out at around 320, 330 levels. So these are the levels to watch. If it stabilizes and if it sustains about 380 levels, I guess it's ready for a pickup going towards 420, 440.
Okay, fair point. Well, thank you so much then, Vaishali, for being with us in the morning edition of Market Today. It's a difficult market to really navigate and spot any stock ideas because the markets are just not reflecting any strength at this point in time. We are down by 1% as far as the Nifty is concerned, 22,574. One really needs to look at cautiously this market, look at the key levels to stay afloat. But remember viewers, not every day is a day when you should be really looking at trading. Today may be one such day as well. Let things settle down, watch out for a few hours. Let's see if there is any recovery that happens. But this was expected. Like I had begun my morning commentary saying that we have an added on negative, and that is the US market's weakness as well. Apart from the ones that there were already any lack of any positive triggers that the markets could latch on to, there is added on pressure. The FIIs are also continuously pulling out for money, and therefore you see even the heavyweight sectors like the Nifty Bank that's not garnering any strength, 1.3% lower. Broader markets also weakening in trade. So it's very, very stock selective. As a long-term investor, you could definitely look at your own portfolio, see the stocks that you have in the absolute long term, and then probably speak to your financial advisor to see whether this is an opportune time to start putting in fresh money if you're sitting on cash and to get the benefit of lower prices at this point in time. So we'll continue to track the markets throughout the day for you. In case you have questions that what should you be doing with the stocks in your portfolio where you have actually lost a lot of ground at this point in time, is it a point to worry, or is it the time to actually double down your investments into those stocks by looking at averaging down? If those are the questions that are on your mind, when daily calls 12 noon is when we will be coming with top market experts to help you identify the right strategy on your stocks and your investments as well. So stay tuned. We have a lot more coming up and a lot of ground to cover throughout the course of the day. Even in this weak market, we are going to be trying to help you out, having the best strategy in the market so that you can hedge your positions and continue to focus on the long-term grades and wealth creation. Stay tuned with us on Market Today and on Business Today television. Welcome, you're watching Royal Ranthambore presents BT Golf. I'm Sakshi Batra, and with me are a very interesting set of golfers right here, all from diverse fields. So let's introduce them to you.
Myself, Amrik Sandhu. I am advisor and director to many companies like AMR India, Gen Technology, Boxman,